We'd also like to welcome up on stage the Chief Executive Officer, Agri Resources LLC, Jamal Jory. Mr. Jamal Jory, let's give him a round of applause and welcome him back on stage once again. Thank you so very much for joining us, sir. I'd also like to take the pleasure of welcoming up on stage the Managing Director, Germany Edible and Fats India Private Limited, Mr. Pradeep Chaudhary. If you could kindly join us, sir. Once again, Mr. Pradeep Chaudhary, sir, we request you to kindly join us. Thank you, sir. We also have amongst us Mr. Srikanth Subarayan. He's going to join us once again. He's the business head, Tata International Limited. We request you to kindly get your hands together and welcome him back on stage. Thank you so very much, sir, for joining us. I'd also like to welcome up on stage Mr. Rohit Mahavir, the Global Head of Grain and Oilseeds, Reliance International Limited. Thank you for joining us, sir. Please make yourself comfortable. We'd also like to welcome Mr. Abdul Moiz Khan, Procurement Director at WOC, that is the Abu Dhabi Vegetable Oil Company LLC. Let's give him a round of applause and welcome him up on stage, please. Thank you for joining us, sir. Also welcoming Mr. Simarpal Singh, the CEO of COFCO International. Let's welcome Mr. Simarpal Singh. Thank you for joining us, sir. And finally, let's welcome the Managing Director of SKI Capital, Mr. Narendra Wadhwa. Welcome you up on stage, sir. Please do make yourself comfortable. Now we've got giants from the industry all fitting together on a really tiny stage, but ladies and gentlemen, make sure that the applause you give all of them is a gigantic one. So please, let's welcome this absolutely amazing panel. And with that, I now request Mr. Sandeep Rajoria to kindly take the discussions forward.
Thank you very much. Friends, without taking much of your time, we have a very high-powered panel here. It's a global panel, and we're going to discuss a lot of macro issues with them, utilize the great amount of talent and information what they have for us. And with this, let me just, because already he has announced the name of everybody, but on my right side is Mr. Untitled Chapter, who is the president of ACA also. And I would give each panelist 3 minutes to speak, and basically what they need to speak in is major global factors affecting vegetable oil, oil meal, oil seed, demand supply, and weather in coming season, and biodiesel policies of the government, and dollar strength, and what about money supply? Fed is tapering now, reducing increasing the interest rate, reducing the bond buying, and then we have government policies and duties and tariff which are affecting in the origins and destination. These are the major global factors which are affecting the agri-commodity as well as the veg oil and oilseed sector. So I would request each panelist to explain their thoughts on these factors which are affecting, and if any other factor they think is affecting the global situation. I start with Mr. Untitled Chapter. Okay. No, okay, Mr. Thakur, the boss of EFCO, who looks after the 8 refineries worldwide, and he's based in Singapore, and let's understand from him the factors.
Good afternoon, and thanks, Mr. Sandeep, for the introduction. I mean, we are really in interesting times. We have all been traders for a while, and this is probably the last 1 or 2 years a lot of black swan events have really, come into light and taken the entire market by storm. We started with COVID, which was also a novelty, and we had no experience of that kind of thing before. And then before we could get over it, we have situations of war looming, we have this Ukraine crisis coming in. And while all this is going on, the government, I think, is on overdrive everywhere in the world, both in producing and consuming countries, trying to fix their own agendas. In producing countries, they have their own agendas, biodiesel. Some agendas are counterproductive. doing one upsets the other. In consuming countries, we have a situation where the high prices is forcing governments to tinker with duty structures, etc. And above all, when we started in the last 2 years, from being, the last couple of decades were decades of globalization, and the supply chain disruptions have made everybody, all governments, inward looking, and we are probably seeing a deglobalization and inward looking stance from most of the governments. So I think we have our plates full with a lot of factors which are not normal, so we can trade fundamentals, we can trade demand and supply, we can trade weather patterns, we can do some predictions on that. But how do you predict war? How do you predict government actions which happens then? So given this background of what we have seen in the last 1 or 2 years, and what we probably will see for the next 1 or 2 years before things stabilize, I feel that 2 or 3 most important, there are a lot of things to talk about, but I would just talk about 2 or 3 important things which are going to drive the prices, which I think everybody is interested in. And the most important factor now, the war is a given. We know there are some disruptions, we know there are some mishaps in terms of production. The other factors are known. Indonesia, what we saw in the last couple of weeks, knee-jerk reaction to local market prices, more political than anything else. But one factor which I feel probably will be predominant in this market, which can probably alter the S&Ds, is the mandates. I think the food versus fuel debate is ongoing. It is more important for countries which are consumers rather than producers. But a lot of countries, I think the European countries, food is not a big problem. Food inflation is not so much of a problem. But I think if they have a global outlook, if they have an outlook that the world is facing a crisis, and everybody has to put in their chips and see what they can do. And if there is a tinkering in the mandates, I am told over 20 million tons of oil, 25 million tons of oil is used in biofuels globally. Quite a lot of it in Indonesia and quite a lot of it in Europe and US. Brazil, Argentina obviously has their own mandates. But if there is a slight change, even if average mandates in Europe from 7% comes down to 5%, I think we are looking at a total different S&D. So that, according to me, probably will be the biggest factor to watch. Otherwise, on our fundamentals, on what we see today, the market looks undersupplied. The demand, which we always thought that these high prices the demand would come down, doesn't look like happening. I am told in countries like India, we are not really seeing a demand rationing, probably because the wage increases, the inflation, the income has also increased correspondingly. So probably the buying power is higher, and that is responsible for the demand not being impacted as much as we feel. So if we see demand, the demand looks to be okay. If we see the supply definitely is a problem, both in Indonesia and Malaysia. From whatever we can say, productions will be better than last year, but the problems in Malaysia, the labor problems, the high fertilizer cost, and the migrating labor definitely will make sure that the production will not come with a vengeance. over last year. So considering all these facts, I feel that the most important thing to be watched is mandates, and the Indonesian thing obviously is going to get over very soon, and then we will be back in business as far as palm is concerned. So that's probably my take.
Thank you, Mr. Thakur, for explaining the situation from the point of view where you see it in Singapore, handling 8 palm refineries. Now, the very big trading house, Tata International, Mr. Shrikant Subramaniam is here. We'd like to know from him how is he looking at the trade flows in agri commodities and veg oils and oilseed, and what are the factors which are affecting the global situation.
Thank you, Sandeep ji. I'd like to, I've been a student of these markets for the last 30 years, and I've always seen that we can do a lot of analysis or we can build up simple hypotheses, and I've always lent on the latter rather than the former. In equity markets, when we see markets are overheated, you do not know the reason, but they find the reason manifest and the market corrects. So when I looked over the last 6 months, even at the overall commodity market scene, the global economic scene was that coming this year, the world needed to have higher inflation because the US is now poised to increase rates. So the simple hypothesis out of this is commodity prices need to keep rising. So if you just have a simple credo, then you cannot time bottoms, you cannot time tops. But all that the market tells you. But if you understand the general direction and you have a story, the rest of the management then becomes relatively easy. It is this mantra that we followed, and it stood us in very good stead. So basically the mantra for the last 6 months was buy on dips. Okay, and markets tend to hover around certain levels for different commodities, and you just look to exit. So as long as the inflation cycle of the US is not over and the rest of the world is following suit in terms of increasing rates, so unless there is a plausible reason to believe that this interest rate cycle is now causing harm to the world and will need to slow down, after that we will see a reversing cycle of prices and a plateauing at some level. So till that level happens, I think this mantra is a very simple mantra to follow, and within that everything else around risk management and counterparty and limits, everything else is a subset of this. And if you believe so and you're working with your partners with whom you trade and you work with, and you can help them and guide them and sort of be a friend, philosopher, guide, that is the sort of way in which we manage not only our business but all our business partners with whom we collaborate and work with. So this is the way we sort of manage. I think 2 big problems that I've seen in this. First is that in India, especially with the Indian point of view, with the NCDX not there, ability to transfer risk away has become a big problem. So I think as associations, as all of us interested, we should lobby to get the futures exchange back. It's a great tool available to all of us to transfer risk on to a neutral platform. So I think that will be one. And I think the second big problem is, in terms of policy announcement that then distort prices very sharply, which, like he also alluded to, cannot be managed. So for the short term you are in pain, in the long term everything comes back to normal, but then you must live till the long term becomes a reality. So when you have sharp swings, and if you have big positions, that's when smaller companies go bust, that's when there is a problem. So depending on the timing of these problems and your position in the market, these extreme swings to manage is the second big risk. That's all, unless any questions.
Thank you, Mr. Subramaniam, for very nicely explaining how the macro theory is very important to understand what is happening in the market. And if you know the theme of the season, then you can play around with that story. That's a good clue you gave to the audience here. We are thankful to you for this. Now I come to Mr. Untitled Chapter, the Agri man from India. He is the man who knows wheat, rice, sugar, edible oil, and on the top, he is also one who's selling Himachal apples. So I would request Mr. Atul to guide us.
Thank you. But first and foremost, I would like to say that Indian demand destruction is a reality. I'll tell you, 2 years back, India imported about more than 15 million tons of oil. And at that point of time, the rate of increase annually as far as India is concerned was something like about 800,000 tons of oil annually, which would translate to about, on a consumption of about, yeah. Now, for the last 2 years, we have been importing 13 million tons, and for all you know, we might actually, as Mr. Mehta also, Dr. Mehta said, we could actually end up being importing less than 12.5 million tons. And our domestic production has not gone up in the same proportion. It has gone up by about a million, 1.25 tons. But what is happening is there is no increase in demand, not even to the extent of the population increase, which currently would be about 1.08 or 1.05%, but there is a degrowth. Earlier we were penciling in per capita consumption at about 18 kg about 2 years back. Now we are penciling only about 16 kg. So this is a big change which is happening, and this is a response both to COVID as well as to very high prices. And even currently we are seeing there is a lot of resistance to buy, and there is a demand destruction happening. The only thing which I would like to add to whatever everyone here has said, and I've been saying it since morning, is one is countries will start looking much more inwardly. There is the theme of Atmanirbharta, or self-reliance, which even our Prime Minister is bulldozing big time. So each country for itself, and they will take the hindmost, is probably going to be the rule as we go forward. The other thing is, and with due apologies to the lovely lady from RSPO who's making copious notes, is ESG or green initiatives might suffer, shouldn't, but might suffer, because whether we like it or not, politicians worldwide would first look at their own jobs. And if inflation hits the roof, you can be sure all these things will take a backseat, whether we like it or not. Germany is a classic example now, talking in terms of reducing the biodiesel mandates, and Indonesia is suffering. So whether we like it or not, or whether they like it or not, at some stage they will have to probably reduce their mandate. Whether they will do it or not is a different matter altogether. The idea behind those big mandates was to ensure palm oil prices rise from a certain level. 2 years back we were buying palm oil at $500-600 per ton, and that time mandates meant a lot. Now when palm itself is selling at $1,800, poor Indonesian government, whichever way they do it, they have to put $700-800 per ton on the table for each mandate on a per ton basis. So how long they are going to be sustaining it? Something which is uneconomical and probably not economically sustainable. So this could probably mean you might see some more knee-jerk reactions, what they would be. And as far as pricing is concerned, as far as markets is concerned, these are volatile times, and a very, very brave man can only predict. I would like to predict anything in these volatile times. Just keep a watch on what's happening and what countries are doing. In fact, a colleague of mine who was the COO of Wilmar, and I'll name him Kim Yong, he used to say, Atul, only 30-35% of price making is basis S&Ds and all those big things. 60-65% is something which you don't have any control of. You can only take reactive action. That's about it. Thank you.
What we have in hand is 1/3, and 2/3 you have to, how fast you react to other 2/3 which is happening. It will tell you whether you are successful or not. Now friends, we have Mr. Jamal Johri. He is the head of trading in Al-Ghurair, trades various agri commodities, and he is a international figure, and we will love to know from him his views on the situation in agri commodities in the world.
Thank you, sir. I will pick up what Atulji has mentioned at the end is the volatility. I think volatility is the name of the game. I think it's here to stay, in my opinion. So be it in the grain market or in the oilseed market, you see. That's, today you could lock in, let's say we took on the $5 corn for the next 4 years. And these are high prices. So, and we have not seen such prices on the corn for instance since 2014. Some analysts say we are here, is it super cycle? Or at least maybe 3 to 4 years we have seen some bullish scenario based on the following 3 points. The Ukraine and Russia, I think it has been, already we're going into climbing the mountain. Then Ukraine and Russia has come in, that the mountain gets steeper, and that's what we have seen all the effect of on the prices. If we take on Ukraine, just out of their 41 million hectares, they are the number 1 sunflower producer in the world, the 6th on the corn. They are the 6th again on the barley, 7th on the rapeseed, 9th on the soybeans, and 9th on the wheat. They are large producers, so we need to see this tonnage back into the flow, into the market, so that we can have some relief. We've seen this morning also that definitely there are some, even on the next crop, we are seeing the lower production that will come from Ukraine. That's point number 1. Point number 2 is the green fuels, especially I think the whole issue of this food for fuels, against fuel, The new mandate in the US, which is the US Renewable Diesel and Sustainable Aviation Fuel industry. So 2 different products. We're not talking about for the car industry, talking about which can replace with the battery, but now they are thinking of moving into the aviation. So that can, if that happens, that also creates a lot of pressure on the supply side. We have seen a lot of crushing plant in US. We are seeing a lot of crushing plant in Canada, so that because of the demand. Will this mandate remain with Joe Biden, or maybe on the next election, if we have Trump back, maybe we can see this mandate scrapped altogether. So I think but we will stay in the volatility world because of this one. In the US also we are seeing that the peak of farmland. They cannot get more lands, more marginal lands to grow. So that's another point which creating this kind of bullish scenario. So the other side, what could rebalance the situation is the Chinese demand. I think if the Chinese, we've been discussing with friends a while ago, where the Chinese release most of the strategic stocks until they ride this crisis. I think this remains to be seen. So how much they will be able to release from the strategic stocks. The other point also, which will help also, is the inflation. I think the rising interest rates, the cheap money no more available, that could also play to at least reduce the impact on the commodity. But as when we started, I think, yes, I agree with you, volatility is here to be staying. You have to be, on the right side of the equation. Thank you.
Thank you, Mr. Jamal. Very nicely explained the global factors which are affecting right now to us, and we have to keep proper watch on them. Now I have Mr. Pradeep Chaudhary, the MD of Gemini Edible Oils. He is the largest sunflower processor and the largest sunflower brand in India. And Mr. Pradeep Chaudhary has a very wide knowledge of this edible traded industry since more than 35 years. So I would request Mr. Pradeep Chaudhary to enlighten us.
Thank you, Sandeep bhai. I have just 2 points to make. Number one, I think the edible oil, or let's say agri production as a whole, last 30 years the farmers have suffered. The prices have not gone up because of a revolution in agriculture production in terms of farming practices, use of seed, fertilizer, and increase in acreage. If you see, just before the pandemic, palm oil was $500, which was the price in 1994, which was about 27 years ago. So it's about time that this increase in the table of agri commodities had to happen. Of course, it has happened too fast in the last 2 years because of shortfall in production, or sort of encouraged by that shortfall in production. So I feel that these prices are reasonable, a little overdone at the moment perhaps, but these prices are reasonable and they were due and should have happened. I'll tell you a case from India. The Indian farmers stopped producing oilseeds because of the palm oil, the way the production had gone up in the last 30 years from, I remember between Malaysia and Indonesia, the production used to be 9 million tons, has gone up to 75 million tons. That did not allow the price to go up at all, even though inflation was there across the world. So Indian farmers stopped growing oilseed. So that is one factor which I feel is very relevant. Second is, everybody talks about elasticity of demand. In a commodity like edible oil, which is an essential commodity, the elasticity of demand is extremely low. The price has to go up much more for the demand to drop. So everybody talks about demand drop. It's a very abstract statement, I would say. I don't think there is any evidence. For instance, when you say consumption of edible oil for hotels, restaurants, or for confectionery or snack foods, I don't think edible oil will make a difference to the consumption of any of these items. More than 1/3 of vegetable oil goes into these kind of items. You look at the upper income household, how does it matter what the price of edible oil is, or even middle income households? It is only at the very low end of the consumers who perhaps compromise a little bit. So all the bull and the bear markets are driven by the supply side, not from the demand side. Now supply side obviously includes the biodiesel. I mean, that can add to the supply side. Now biodiesel mandates, who's going to change? The producing countries are the one who have put the mandates. So the producing countries are not going to change. I mean, if I was Indonesia, the president of Indonesia, I will say why. The mandate should be there. I am diverting 8 million tons, which is raising the table for the other 37 million tons of vegetable oil, which is a foreign exchange earner, money churner, and helping the farmers. So I think mandates to change food versus fuel, that debate is relevant for the consumption markets. But for the producing people, they are not going to change it so easily. I mean, this is my 2 points which I thought I'll highlight to you. Thank you.
Thank you, Pradeep ji. Very nicely explained. Inelasticity of demand, and at the same time how we have to have good supply of agri commodities, and we have been lacking all the while, and these prices are incentivizing that supply. So it's a good point. Thank you very much for this kind of review. Now we have Global Head of Reliance International, Mr. Rohit Mahabir. He is a veteran in commodities and he has a worldwide view on commodities. I would request Mr. Rohit to guide his views.
Thanks, sir. So, I would just like to touch on the subject on what really changed the trend. The trend changed in 2020. It was, till then, there was hardly any volatility in the oilseeds complex, in the corn complex, in the wheat complex. The US was consistently carrying over a couple of billion bushels of corn, more than a billion bushels of wheat. Being carried out was upwards of 500,000 bushels, so 500 million bushels. So it was a very boring scenario. So what really changed the trend is that China came into the market in 2020 after destocking their humongous corn stocks which they were carrying at a point of time it was 285 million tons, which went to 50 million tons, which is kind of the requirement the country has given the huge consumption in their poultry and swine sector. So China came in 2020 with a demand of 35 million tons of corn, additional corn in the global market. They also came out of the swine flu, which was devastating their demand of soybean meal in 17 and 18. It started stabilizing in 19, and in 20 their demand went up from 85 million tons to 100 million tons, an increase of 15 million tons. Then came the wheat. They had a TRQ which they never used. The TRQ is around 10 million tons, and they were importing something like 1 million to 1.5 million tons of primarily of high protein US and Canadian wheat for blending, and they increased it to 10 million tons. So the world suddenly, which somebody who is following the balance sheets probably saw China coming, but most of the world was unaware of it, and that was an additional 60 million tons of demand between corn, beans and wheat. So that is what really destocked the surplus that the major exporters were carrying. It started destocking. Now, it was a calamity after calamity. So first was demand driven, which was China. It was not supply driven. Then came the supply issue in Brazil. You had the corn crop of 85 million tons after a drought, and they were expecting 110 million tons. So corn suddenly became a very bullish commodity. The stock to use went up to its lowest levels in the history, and the US had gone below 1 billion carryout, so corn had significant premium built into it, and the wheat also followed because it's always a follower of corn. We didn't have a problem in wheat by then. Then we had another issue in soybean crop of Brazil. USDA was taking 119 million tons, 139 million tons, and the production went to 120 million tons. So beans, from being sold nicely and comfortably, again went into a very tight scenario, and we saw a big rally. So then coming to the grains complex, things, because of the higher prices, we saw US maximizing its acreage in corn, in beans, and it was upwards of 180 million acres consistently for the last 2 years. So it looked like, okay, the situation is going to get solved now, but came this, and grains complex, I still remember, before the war, it was looking a bit on a bearish side, because you had normal wheat crops coming in, good wheat crop coming in Russia and Ukraine. Europe looked fine. Europe is now, because of the heat, the crop which you were taking at 145, it's gone sub 140. So, but scenario was not that bullish on the grains complex, on the wheat and corn. On the oil seeds, till the next crop in Brazil, oil seeds looked, it is kind of, you have to watch it out. It is bullish, or at least the complex is bullish, and you have the price, the premium built into it. But the first time we saw in US, the bean acreage for this season came more than the corn acreage. It is historically, the farmers reacted to the high bean prices in their acreage intentions. So then the next calamity, which is man-made, is the war in Ukraine that came, and it has really freaked out, I would say, anyone who watches the SNDs, because now we don't know how the balance sheets are going to solve. Though globally, the balance sheets have to solve out, either through demand destruction. We are not looking at a big demand destruction. Right now we are looking at a very different and difficult supply side, which we can't forecast. We have lost Ukraine completely. We don't know when it's going to come out. You have got 35 million tons of corn that Ukraine, 30 to 35 million tons of corn that Ukraine exports into the world. You have got 20 to 25 million tons of wheat that comes out of Ukraine. It's a big supply. It's 70 million tons between wheat and corn. You have got sunflower seeds, sunflower oil that's coming out of there. So it's a big supply crunch globally. So how the world is going to solve the balance sheet? This year is what all the panelists have been saying, difficult to figure out. As Pradeep sir said on the mandates, I completely agree. The producing nations are not going to sort of go and debate on the mandates so fast to ensure that the global world gets the supply at a lower price. Those mandates, I don't think they're going to change. So how the balance sheets are going to evolve, how they're going to solve is something which we need to see, and in the trading world, that's our job, to figure out where the supplies are going to come from. You have got 40 million tons of wheat, which really looks unsolvable, looking at the balance sheets and the supply crunch from Ukraine. And we don't know, Russian wheat, which we are taking at 40 million tons, whether with the LC issues and all that, Russia can supply that 40 million, maybe it is 20-25 million. So wheat looks unsolvable. How it solves? Maybe through feeding in Europe. Europe feeds 40 million tons of wheat. Maybe that feeding goes down to 25. They import corn, which is say 15 million tons. It goes to 30 million tons of corn. World can give corn, though the corn balance sheet is also very tight. So we are in an era of higher prices. Higher prices will solve through demand destruction, through substitution, in originations on the feed side, wherever it can happen. But ultimately, these prices are only going to soften or come down with normalization in the Black Sea, with the Russian LCs, with the Ukraine opening up. I don't think there is any solution nearby for prices not to go higher up from here. Thank you.
Thank you, Rohit. Nicely explaining the situation right now in the world for wheat, corn, and oilseed. That immediate there is no solution in the hand. There has been a tremendous destruction in the crop in the South America, and flows from Ukraine stopping, Russian LC issues, all this kind of thing. The supply challenges do remain still till the time we have a next big South American crop. And US weather is also now very important to watch for. So thank you for your nice views on this global scenario. Now Mr. Khan is the procurement director of Abu Dhabi Vegetable Oil Company. He is one of the very important players in the Middle East region, and we would like to know from him how does he see the global situation and how is it affecting the demand and supply in this Middle East area from him. Thank you.
Thank you very much. Ladies and gentlemen, good afternoon, and thank you Teflas for giving me this opportunity. Like all the experts have spoken, I don't have an international view on all these things because we are a very small player here and we are focused more on the UAE and the regional market. And being on the supply chain side, I'm more affected by what happens on the supply side than anything else. Last 2 years have been very challenging for everyone, so it was the same for us. When the COVID outbreak happened, I think the governments decided to stock up on supplies because they were fearing uncertainty in supplies and supply challenges. So the same thing happened here in UAE. In the first half of 2020, there was very good demand, mainly because of stocking. And then the effect of the lockdowns and all kicked in. And the second half of 2020 and the first half of 2021, we have seen slowed or low demand, coupled with supply challenges, logistic issues, freight issues and all that. So all that didn't allow our business to grow, or we can also say either it stagnated or degrown a little bit. And thanks to the Expo 2020, the second half of 2021 was better. and we thought now things are going into positive direction. And then we have seen the Ukraine thing and now the Indonesian thing. So I've seen more challenges in the last 2 years than any opportunities. And listening to different views here, I mean, it's difficult to form a firm view, and I think I'll have to just, pass this subject to the experts here, and
Thank you.
You will sleep well. You will sleep well.
thank you.
Now you have nicely put up how refinery company, the company which is serving the veg oil to the consumer in the Middle East, what serious challenges they had to go through, and uncertainty was the norm, then the exception. So how to deal with them? Pretty interesting. Everyone, everywhere in every geography is facing this kind of a situation. Let's hope situation to cool down somewhat. Now friends, we have Mr. Narendra Wadhwa. He is the President of Commodity Participants Association of India, and he is the one who deals with the commodity markets and they license the government to get the best for the commodity markets. So Mr. Narendra Wadhwa is here with us, and one of the gentlemen here also raised the need, Mr. Shrikant, of starting with the MCX and NCDEX because we don't have any hedging instrument now. All the while the market was going up, okay, but now probably market can take a reverse direction, and if you don't have a hedging instrument, then it's going to be very challenging. So I would like to understand from him what is his view regarding the commodity markets and especially the futures market in India.
Thank you, Sandeep. First of all, congratulations to TEFLA team and Kailashi. I am from the commodity derivative market and financial industry. So I totally agree with Shrikantji that when 2003-04 these exchanges were built, the basic purpose was efficient price discovery as well as price hedging and risk management. So unfortunately, with the inflation and world over, the governments are reacting. Like in Indonesia, they have banned it. In Malaysia, there is export tax. In our country, government thought that it is just because of derivative market, they banned 7 commodities in the derivative market, and all agri products contracts were there. They have been banned. So there is enough, very much need for these markets, because what we have seen last 3 years, although it's a super cycle in commodities all across as well as in agri commodity, but there is, with the volatility coming in, you have to hedge. I was listening in the opening session, a lot of money has been made in last 2 years. Then you have to hedge that, you have to protect that whatever you have earned, and going forward definitely you require a hedging instrument. So again, from the association point of view, as you just mentioned, I am heading CPI. This is not only agri market but all markets. I am part of CDA committee, risk management committee, as well as hedging committee of Ministry of Finance. So we are educating and educating everyone that they need to hedge in the markets, especially all over, not agri market, every commodity market, because it works in the cycles. Although they say super cycle normally stays for 3 to 5 years, this is a minimum cycle. But again, with the volatility in the market, you have to hedge. So this is my point, and I will again appeal, as you are, from the sea, we have to go together to the government and ask them and request them that we should have a platform, neutral platform, where we can hedge our products and everything. That's from me.
Thank you, Narendraji, for very nicely explaining and very good service you are doing to the industry of futures in India. Thanks for your views. Friends, we had a very nice discussion from a very esteemed panel, and they have shared their private views, how their mind thinks and how they decide. So I think everybody is enriched very much with their kind of view. And let's give the full panel a very big hand. Yes. Thank you so much.
Thank you so very much, gentlemen. I think firstly, let's all just step forward and get a group photograph together here. So we can keep the applause going up, ladies and gentlemen. Indeed, what a fabulous panel, and thank you so very much for keeping within the constraints of time and dealing with the topic, giving it all the attention that we required here. Once again, ladies and gentlemen, I know that we, due to paucity of time, cannot take any questions on the public forum, but we do encourage all of you to kindly interact with our speakers or panelists at any point of time, and one-on-one, let's discuss all the issues. Gentlemen, we request you to kindly stay back here on stage. I request all the gentlemen to please stay back on stage, as I now take the pleasure of inviting up on stage none other than Dr. Inge Slash to please join us. And ma'am, if you can kindly be here to hand over the e-mementos to all our distinguished panelists. I request you, ma'am, if you can kindly step forward. Now listen, ladies and gentlemen, every single one of us here in this room, we need to make sure that we are a part of the felicitation process. So as ma'am would have a handshake with each gentleman as their e-mementos are displayed, I request you all to give them a big, huge round of applause. Starting with our moderator, Mr. Pradeep Chaudhary. Let's have a big round of applause, please. Up next, I invite Mr. Untitled Chapter, sir, if you can kindly step forward. Oh, that was fantastic. Up next, Mr. Jamal Jory. Let's have a round of applause, please. And now let's have a round of applause for Mr. Pradeep Chaudhary. Let's have a round of applause for Mr. Srikant Subarayan. A round of applause for Mr. Rohit Mahabir. Let's hear it for Mr. Abdul Moiz Khan. Let's have a round of applause for Mr. Simar Pal Singh. He's not here, but let's give the round of applause. Mr. Thakur is here. Yes, sir, please. And finally, Mr. Narinder Wadhwa. Thank you so very much. And of course, one photograph, ma'am, with you right in the center here, with all the gentlemen. We just had a photograph earlier on, but Chaturvedi sir, if we can please have you here. Mr. Rohit as well, if we can please have, oh, okay, sorry, we're all here. Let's make this a nice good photograph together. Thank you so very much. Well, ladies and gentlemen, once again, what a fabulous panel. And with that, I would like to thank, ma'am, thank you so very much. I'd like to thank all our esteemed panelists. Thank you so very much for all your views, for sharing so very much with every single person here. Thank you once again. Please make yourselves comfortable. And we now have our next panel, which is the Price Outlook panel. Ladies and gentlemen, our final session for the day, for which I would now like to firstly invite up on stage the CEO of Imami Agrotech, Mr. Sudhakar Desai. Let's have a big round of applause for him, please. He's joining us up here. Thank you so very much, sir, for joining us. We'd also like to welcome up on stage Mr. Mahendra Vaid, the Managing Director of West African Soy Industries Limited. Let's have a big round of applause. Here he comes. Thank you, sir, for joining us. We also have amongst us Mr. Naveen Sharma, the Global Head Edible Oil Business, Olam International Limited, Singapore. Let's have a round of applause. Welcome, sir. We also have amongst us Mr. Martin Stamps, from Vitera, Rotterdam. I request him to kindly join us up on stage. Once again, Mr. Martin. Let's welcome Mr. P.R. Thakur, CEO of IFCO Singapore. Let's have a big round of applause. Thank you for joining us once again on stage, sir. We reserved your seat. Let's welcome up on stage Tajgir Rahman, the General Manager, Trading and Hedging, Sabula Food Company. Welcome, sir. Thank you so very much for joining us. I'd like to welcome up on stage Mr. Vivian Gupta, the CEO of Lewis Dreyfus Company. Mr. Vivian Gupta. Let's welcome up on stage Mr. Hemant Bansal, the Business Head, Oil Seeds, Crushing and Refining at Ruchi Soya. Round of applause, please. Thank you for joining us, sir. Let's welcome Mr. Ashish Acharya, Vice President, International Trade Division, Ruchi Soya. Welcome, sir. Let's welcome up on stage Mr. Kamalapuram Sant.
At the same time, they want to know the micro factors, and ultimately they want to know where the price is going to be. So that's the million-dollar question which we are going to ask all these panelists, and they are experts. Believe me, they are the masters and experts in their own field, and great amount of knowledge which we are going to steal from them today. So that's what we want to do today. And I have on my left is Mr. Sudhakar Desai, who is the veteran in our industry. He is the CEO of Agri, the India's top 3 company in veg oil. And then I have Mr. Ved with me. He is the man who comes from Africa, and he is leading the commercial operations of a very big African company. Then we have Mr. Tajgir Rahman on my left, who is the head of trading in Savola. Savola is a very big player in this MENA region, and he carries a wealth of knowledge with him. Then I have on my left is Mr. Hemant Bansal, who is head of crushing in Ruchi Soya, one of the very largest top 2 crushers in India. And he looks after the crush of soybeans and crush of rapeseeds, also looks after the palm plantation. And then we have Mr. Sridhar from Algure. Mr. Sridhar is a veteran, and he is dealing in heading the Alguret's operations for many commodities, and mainly canola crushing, canola refining, and all these products. So on my right is Mr. Naveen. Mr. Naveen is head of operations in Olam Agri, which is newly formed the offshoot of main Olam. And Mr. Naveen is in Singapore. He's heading the global operation. Thank you, Mr. Naveen, for being with us. And Mr. Thakur, as I already introduced, he's leading the commercial operations of IFCO. He's also based in Singapore, and he also looks after 8 palm refineries. And last but not the least, Mr. Ashish Acharya is a very young and dynamic personality in our trade and industry, who is leading the oils division in the Ruchi Soya, and he has tremendous wealth of knowledge. He has traveled all over the world, and he has not only done the great amount of trades, chartering, hedging, and physical buying. So with this kind of a panel, it's going to be very interesting. I would like, after this introduction, because we all deal with mainly palm oil and soy oil and sunflower oil, so I would like from the esteemed panel, what is the outlook on the crops, outlook on the weather and sowing for these things. The next, after this discussion, after this round, next round we are going to talk to them on the prices, what they see the prices in next 30 days and 90 days and the whole of 2022. So first we are going to talk to them regarding how they see the demand, supply, crop outlook, sowing, yields and weather on the crops. So I will be asking each one who is a specialist in their own field regarding the particular commodity. So I start with Mr. Naveen Sharma on my right, and I would like to know these things from him.
Thank you, Sandeep. I think we can probably, the earlier panel has covered most of the points which are strategic and structural. And one of the points was also that I think we have had, I think Mr. Pradeep Chaudhary mentioned, that we have gone through long periods of low prices for the farmers, because I think after the Super Bull cycle in 2006 and 8, there has been a huge supply response. And because of that, if you see, we went through the period of low prices for about 6-year low cycle in palm. And structurally, we were already kind of building towards a little bit firmness in prices, because after 2015, when Jokowi put the moratorium and the ESG structure started to build up, the new planting speed actually almost stopped. A very slow level of planting was happening. And palm has been doing the job of like feeding the oil growth in consumption demand that was coming in vegetable oils. So slowly, like, we have seen that impact now coming after 2 years ago. I think you mentioned the prices were about $500 or so. We are more than tripled depending on whatever price reference you want to take. I think, and Brazil has contributed a little bit more in terms of the crops, but and Black Sea was another area where we saw a lot of agriculture commodities growth. So that was a structural part. Now coming to like this year particularly, I think we entered this year in the beginning where we had the tightest S&Ds for the Q4 and prices rallied. And everybody was kind of mentally prepared that we would start to see production improvement in palm. And somewhere in the Q1 onwards, probably like what happens at the POC, after POC markets just crashes. So people were expecting the same, that prices will start to react and come back to the normal levels. But what happened was that it started first with the damaging crops in the South America due to the Brazil and Argentina drought. And after that, I think we all know, so first was some parts of the domestic market obligations, export permits, disruptions which disrupted the flows more than helping the cause. And then we had the ultimate finale in terms of the Russia-Ukraine situation. So what all that has done is created a lot of uncertainty in the prices, and we have gone through the tightest period in quarter one, quarter two, now we are going through. Demand destruction, there were some discussions in the first panel as well. My view is that I think we have actually seen a lot of demand destruction, especially let's say from China. India, I think there is a lot of lower imports, but probably offset by the higher rapeseed crop that we have seen. Not that much of demand destruction. But the production estimates that people had in the beginning of the year, I think from there we have lowered a lot of production, especially in the sunflower oil. So palm, you are still year on year going to be a little bit positive. But now that's a big elephant in the room, that how much reduction you want to take in the sunflower oil. If anybody can tell me when Putin will decide that we are not going to continue this war, I think from then on we can say that things will get back to normal and we can start production on that. So first half is that we're definitely seeing demand rationing, demand reduction. In the second half now, so far everything is kind of priced to perfection. We need to build European rapeseed crop. We need to make US plantings in crop. Canadian canola, which was 30% lower last year, it's supposed to be back this year. And if we bake all these things into the picture, I think then we should be able to have a finely balanced S&D for the vegetable oils this year. But I think next few years, I see vegetable oils being very tight because of lack of supply side coming up. And specifically, I think if you have to see what will drive our prices in the next couple of months, is one is the Indonesian uncertainty or the lack of clear conviction from there. Second is the biofuels. I think biofuels actually is about 42 million tons of vegetable oil that is going into biofuels. And some of the people I think mentioned correctly, producers would not be really, I think, keen to make those changes. So that rules US and Indonesia out. But in EU, I think we might see some reduction. And anyway, EU is going to reduce palm oil in the next few years on that. But that element of what happens to the biofuel mandate, knee-jerk reactions from Indonesia, I think these are the things which are going to drive the prices. If let's say we remove this uncertainty, then we get back to normal flows, I think prices are a little bit overheated for the trend that we need to see. And but I don't see prices going back to the 2-3 years ago levels in edible oil sector for the next few years. Thank you.
Thank you, Mr. Naveen, for very well explaining the H1 and H2 of the year and giving us a snapshot into what's probably is going to happen. And now I request Mr. Sudhakar Desai to give his views on these points.
Thank you, Sandeep. I was just looking through the notes as usual, which I do. In the Globoil conference in September, the price table was about $12.50 for palm oil and $13.50 for soy and sun. And I think all of us said that by March the prices should cool off. But then 2-3 events have happened. Number one, the war premium, I would like to put a number to it, it's about $400 that got built into the price opinion because of the uncertainty, and then came the uncertainty of Indonesian ban, right? So, as usual, as expected, the low prices and high prices both will attract more than required government intervention. So, every government, like India, for example, have taken many steps to because the focus has shifted from the farmer to the consumer. So you cut the duties, you put stock control, you shut the exchanges to reduce the speculative activity. I think every country was trying to respond to the price table. But if you take a step back and see what has it done, it has made risk management extremely important, number one. And number two, it has created a volatility which you have not seen before. I think there were some years in which you have not seen 1,000 ringgit volatility for 1 year also. But on the day of the ban, for example, you saw 1,000-point volatility in a single day. I would say that this trade is not for the faint-hearted. But I would also say, with these black swan events coming in flocks, probably every company has to start looking at its own risk appetite and managing the risk in a manner that you can, you have to change the trading model, because as Indian buyers, refineries, most of the destinations are short by nature, right? You need the oil to be procured. To answer the other question of supply demand for the year 21-22, if you see, globally it would appear that it is all balanced. But you have to solve the balance sheet problem of lack of 700,000 tons of oil from Ukraine, and then Malaysian production is stagnant to 500,000 tons more, and Indonesia is where you have surpluses of palm oil, and it is funny that the world's largest country is struggling with the inflation, right? But I think it is all concluded already that Indonesia will have to lift the ban in a couple of months. I already hear that the price in Indonesia is coming closer to the targeted price of 14,000 rupiah per liter. If one is able to buy at in the last 1 week 30,000 rupiah CPO, then you would probably, the purpose would be met. So soon or later, my friend here predicted, we had a bet. Sandeep says 15th of May will be lifted. I think he knows some inside information, I don't know. But sometime in May it would. But then by the time Malaysia would get very tight stocks, it's probably 1.6 million in April, but it will get to probably 1.4. But because remember that Indonesia is not shipping. Every day that you don't ship, two things are happening out of Ukraine and Indonesia. A, the stocks are building up, and B, the destinations are becoming drier that much. So it's a conflict between, how you see the post facto. You should prepare not about what the event that have happened, but what is going to happen once if you see normalcy of supplies. The whole thing right now is not that of S&D or of, it is more of a supply chain and the trade flows issue, in my opinion. We'll talk about the most difficult part of prices in a while, I guess, but that's what I feel right now. Thank you.
Thank you, Mr. Slagar, for giving interesting snapshot in a different angle of the way we trade and way we look at the situation. Now I'm not going in a same direction. I'm just skipping and jumping from here and there, looking at the core competency of every panelist. So I would now like to go to Mr. Ashish Acharya to understand from him regarding the markets.
Thank you, Sandeep ji, and good evening to all. It's a very tough question what you asked. When the news is a completely news-driven markets, you never know what will happen next day, next hour. That's for sure. Cure for high prices is high prices. There is another set in our trading world. And that is what is happening and is going to drive the market. Not now, not in near term, but in months to come. There is clearly a demand destruction in this current oil year. increase in production of close to 750,000 metric ton. At the same time, the import number, if you project the likely import in current oil year, you'll find hardly any change. There is only shift in the increase in soft oils, which is close to 25 to 28% increase compared to last oil year. Palm is going to be down almost 10%. Sunflower oil, very interesting, is last oil year is close to 2 million and now is going to be 1.7, out of which 1.2 has already been imported. India is importing close to 70,000 metric ton a month. It's managed to find a solution for the sunflower oil. So clearly there's a demand restriction not only in India but around the world. B is, I think this is, it's not going to solve. We are in the middle of the bull cycle. We'll get to see more deep corrections like what we saw in the last year same time, May, June. Until the supply increases, which is going to meet the demand, I mean, this is not going to solve. I think there's too many open-ended issues, and what we need to watch and what we are not addressing it is two major weather events going to happen in the world in next 3 months. One is the Indian weather, second is the US weather. Thanks to the last 9 years, India has been quite blessed with the normal monsoon is going to happen this year as per all the prediction, yes. But if you go by the more permutation combination ratio, I think there may be chances of not good in the oilseed area. Let's see what has happened, keeping our finger crossed. What we need to increase in supplies, which is clearly missing, at least we're going to miss next couple of months. So I think the price wise is we have reached to the high plateau is going to be like that only. We're going to see more volatility to come in near future, and we have to be ready for it. That's as Sudhakar correctly said, is like risk management is the most important. We all had a very good year, as 2 years, and to manage it, to hold it is going to be a challenging task in coming months. Thank you.
Thank you, Mr. Ashish, for nicely explaining. In these two major weather events, what you're talking about, definitely we'll keep a watch on them. He's saying, although the predictions for Indian monsoon are near normal, but still the law of averages doesn't say so. And US weather is definitely going to be very crucial. So yes, definitely going to keep a watch on it. Now, I would like to request Mr. Ved to make us understand the situation, what he sees, and especially in the Africa region, what he sees. Mr. Ved, can you take that mic?
Thank you very much, Tefla. Thank you, Kailash Bhai. Thank you very much, Sandeep Bhai, giving us opportunity to come here. So we have seen in the last couple of years, there's lots of changes in the market. That in the last 2 years' times, we have seen the market has been almost 3 times whatever the in 2020 we started. So similarly, in the last 1 month, we have seen that prices has been almost 41% higher than whatever the price in the month of February. So all these good movements that showing that now the micro is not that relevant than the macro events are relevant. So we should focus more on the macro side than the micro sides. But SND totally will get disturbed. We have seen in the last couple of years that it just started with the palm oil destruction in the palm oil production, then came to the COVID side. Then later on we have seen the destruction in the South America crop, then Indonesia. Who was thinking that South Indonesia will ban when the production they are going to start booming, and then there are restrictions in the production, there is a stoppage in the Indonesian ban. So all these are the very, very important factors that we can't ignore on that factors. So I factor the 6 factors that is very, very relevant for the edible oil industries. 3 is related to macro, 3 is related to micro sides. So first I would like to say that the micro sides about the palm oil productions. So we have seen that the last 10 years before the 2019, the palm oil production growth was about 4%. So that was balancing entire growth which is coming into the edible oil sectors. So that was the balancing factors. But in the last 2 years, we have seen there is no growth in the palm oil side. almost palm oil growth is on the negative side. So we have seen that there is a lot disbalance in complete S&D sides. So lots of troubles we have seen with the price side on that side. But in the last 4 months we have seen that there's some growth indication is coming. Although not the 2019 level, but some growth positive indication is coming, that 3 to 4% growth is coming. So I would say that if this growth trend will keep continuing the rest of the year in 2022, so we may see that some price reduction, some price pull down. But I would say not that the bearish trend, but I would say that the price level is we saw in the month of February, so we can see that whatever the hike in March month, that might be that may be pulled down. So this is the one factor I like to say. That another is very, very important about the US crops. I say that we can't afford any much loss in the S&D sides, so supplies need to be very high. So in that side, if anything that get damaged in US crop, that will hamper in the entire industries. That market may go with any directions. Even though palm oil production would be high, because we can't afford that after the Ukraine war, we can't afford any more losses on that side. Third is important about the China demand that we have seen in the last 4 or 5 months. China will come aggressively the buying side. So I think so very soon when the COVID situation will get pulled down there, so they may come aggressively in the buying also. So that is a factor we can't ignore. That apart from the China, we have seen that there are also countries which also come aggressively because that food crisis is globally. So they may come forward to build their inventory position. So whatever the Atul Bhai mentioned in the morning hours, the demand restriction would be there. So my mention is that apart from the demand restriction, that might be possibility that other countries will make come forward for the aggressive buying to build their inventory level. So this is the one factor. Fourth one I would like to mention about the high inflations. So we can see that the lots of government interventions in the next couple of months. So many interventions, maybe the positive side, maybe interventions the negative sides. We have seen that like Indonesia when the palm oil is maybe that sometimes that India may reduce the duty. And similarly that Indonesia may can increase the duty part. Similarly some other countries can do anything. So these are the interventions we can see the next couple of months. So fourth is important part about the fund positions. We have seen that the funds are very aggressive in the market. So they like commodity, equity and the metal, all three, they are very aggressive in that side. So right now they are sitting at the all-time high fund positions. So if right now we have seen in the last couple of weeks that some wind down in the equity side and metal side. So if they will lose some position in the fund will lose some position in the long position in the commodity sides, so that may be impact to our edible oil market. Last important is the foreign forex crisis. We have seen the many countries that is a foreign forex crisis are there. So if the buying level of the many countries are not that up to the 28, 19 positions. So like we have seen in the Pakistan, we have seen in the Sri Lanka and Bangladesh, Nepal and neighboring countries. Even though I am working in Africa, so I can say that the forex position is very tight there. So and then nowadays we stop the entire aggressive buying on that side. So right now the demand restrictions is also there in the particularly physically. I would like to give an example that I was selling 70 ml such as the 50 naira. So I'm mentioning the same price 50 naira, I'm giving the consumer 28 ml on the same 50 ml 50 naira prices. So this will indicate that some restriction would be there. Might be restriction more in the India because India is more and their contribution the food side is less, lower in comparison to Africa. But this may impact in the future in coming days. So now I come to the one important point about the soybean seed because that is more relevant for me. So I would like to mention that how Africa is going aggressive in the soybean seed side. So the soybean seed production in Africa is about 2.5 million tons, and that has been doubled almost in the last 5 years. It has been doubled. Whatever we were producing the last 5 years back, it has been doubled, and the growth rate is very aggressive. We can see the next 5 years the growth will be very high, and we can see that the production would be about 5 million tons, and the major importer would be the India and China. We are producing the non-GMO soybean seed. So basically our nearest competitor is India. So I see that in the 2021 that the spread between the non-GMO and GMO soybean was up to $300 per metric tons. So I see that this is like $150 dollar per metric ton. In the coming 1 or 2 years, I don't see that this spread will keep sustained up to the $50 maximum side. That will impact, what I am mentioning, that this impact on Indian S&D, because that this will add another one segment for the India S&D, because about right now in the last 5 months India imported about 500,000 tons soybean seed. So I can see that the next couple of years India will import about 1 million tons, because the LDC advantage, they will get the LDC advantage. So we need to factor this part also in our S&Ds. So that is very important. About the strategy side price, so that what is my suggestion to the if we are getting anything the cheaper, the forward one sell ready and the buy the forward. That should be keep continuous strategy. I don't think so that prices will go down more than $50 to $100 in the forward month, not the ready month. So and about the LDC soybean seed sides, I see some downfall in the coming years, because India is carrying about 6 million tons soybean seed. So there is huge quantity and they are going to cultivate more. And also Nigeria, African countries also having some quantity. So I would say that this India soybean seed prices may see some major correction in the coming days. This is my thought. Thank you very much.
For giving a nice snapshot, and especially on the African production of the soya seed rising from 1.25 million to 2.5 million, and probably next 5 years it will go to 5 million. That's great thing to know. And India is always hungry for the seeds, so we'll definitely look for import more. Now we have Mr. Taj from Samola. We'd like to request Mr. Taj to express his views on this subject.
Thanks, Sandeep ji. I just want to say that I am very bearish on the market. I think one of the most bearish here, and mainly because of the demand destruction which we are seeing in the Middle East or in all other part of the world. Now, for me, I see that we are in a transition phase from very bullish to very bearish. So, on the very high prices, they have already destroyed the demand. Now, we are just waiting for the supply side to come in. So, once we see the supply will not be enough to handle the demand. So market has to go down, or the spread has to widen with the soft oil. So for me, I think the next US crop and the Indonesian crop, the next 3-4 months will be very crucial. And the US crop, because the planting delays and all, I think it's a very bearish for soybean, because ultimately rain makes grain. So all the delays planting or the corn planting will shift to soybean. I am expecting 1 million shifting from soybeans, from corn to soybean. That will create another build-up of stock in soybean. And the other side, in palm oil, productions we expect to go higher. And with this low demand, when the production comes in, palm price has to go down. And I feel palm has the potential to trade $250 to $300 below soya oil. So in that way, you can see the demand destruction which we are seeing in the market now. The sun oil price, which we are all talking about, the supply crisis in all this world, but ultimately sun oil is trading only $100 above soya. So it means the demand, sunflower has destroyed so much demand that even with lower supply, prices doesn't want to go higher. So currently soya oil is around $18.50, sunflower oil FOB around $19.50, around $100. So it's ultimately the supply which within the next 2-3 months it will dictate the prices, and I personally feel BMD has potential to go down towards 5,000 by September, October, and KAs would trade around 1,300 to 1,350, and OND only around 1,200 to 1,250.
Thank you, Mr. Taj. Very nicely. We need some person with a bearish view as well. So, because if everybody has the same view, there is no wealth of knowledge you can draw from panel. So, it's better to understand different views and different scenarios for everybody. Now, friends, I would like to hear something from Mr. Sridhar, the trading head of the Algorand. He is a very smart trader, always in money. So let us understand the mantra from him. How does he make money?
Thank you, Sandeep ji. Okay. I would restrict myself to canola. Okay. See, like we said, the crop has been 40% lower in Canada, but the price is up 200%. What is the answer? So there is no demand destruction I see. I see the market is reacting to a supply destruction or a supply disruption. Coming to the demand destruction, for me, canola, I have not seen from my existing markets demand going down, market to other. That could be because of non-availability of some other oil. So from my perspective, there is no demand destruction. Give you an example. In GCC, we used to do 10,000 tons of canola for the whole year. And in last 2 months, I have done 3 times that. So for me, how do I call it as a demand destruction? That is for you, not for me. For me, it's a supply disruption. So the prices are dependent on today, the supply is the crisis, which is creating the prices. Okay, if there is enough supply, prices will come down. Okay, if there is demand destruction, price should not go higher. Okay, price should come down. Price is going higher because of the supply problem. So once you fix the supply problem, you will see the prices coming down. So for canola, okay, Canada is the biggest. Okay, you have a 40% crop only. Okay, that is going to create a huge problem. Even the Canadian industry crush is down today. So, but going forward for the next crop, we are all hoping that the moisture levels is good. Last year also the start was great, but July, August killed everything. So hopefully if this year you don't see any issues in July, August, if you go back to 20 million tons, yes, you see a very bearish situation coming back in the last quarter. But will the prices go back to the previous ones? That is the big question mark. So we don't see the lowest prices, but these high prices may not also live for long. Right now it is going to stay there because there is nothing available. So the price has to stay high. Okay. This is all. Coming back to the market situation, okay, my first lesson in trading was market, everybody says volatility. Yes, volatility is going to remain here. You are going to see 300 points move in a day. Okay? Hold on. Don't panic. Okay? Next day you will get your chance. There is somebody out there who is panicking. Okay? So you will get an opportunity. There are 2 factors which run the market. As per my listing, it's fear and greed. These 2 emotions drive the market. So if you have fear, please stay calm. If you are greedy, don't be greedy. Book your money and take it in your bank. So this is my humble request to everybody. Don't panic. Okay? Market will give you chance. Somebody out there will panic. So the canola crop, okay, is going to, so we are expecting it. Let's be positive. They say that there is no 2 consecutive droughts in Canada so far. So hopefully we might get back to the 20 million. We all will have enough oil. It will be coming and prices will cool off. So demand destruction for me, I am not seeing it. Okay, I see it because of the supply problem. Like you said, okay, you have a problem in sun oil somewhere. Okay. We are not seeing any lower shipments to the countries we are in. Europe are buying the same amount. So I am not seeing less from Europe. Yes, the biggest factor today which is to be seen is the lockdown in China. Okay, 6 weeks. Okay, you are in lockdown, no trades. Market, when the Chinese comes back, we will have to see what will happen to the market. So as per our listing, stocks are low, okay, because of lockdown, payments are stuck, shipments are lying down. So all this will putting additional listing. And also don't forget, freight is also gone higher, which is the biggest component. So be positive, you will have your good times. Thank you.
Thank you, Mr. Sridhar. Sridhar not only told us what his view on the market, he also told how psychologically you should deal with the market. The biggest factors of greed and fear, how we should handle. And I liked his way, don't panic. Next day you will have chance, somebody else will panic. So it's good. Sridhar should have PhD in psychology as well, along with the trading.
Hands are shaking because the chartist hands are shaking. They don't know which way to draw the lines.
Good. Thank you very much, Mr. Sridhar. But at the same time, demand, sometimes destruction or switching is happening. Like sun oil demand is switching to canola oil. So that's what is happening. So some destruction, some switching, all these things are also happening at the same time. So but it's good to have different point of view. That's very nice. Friends, now we have Mr. Hemant Bansal, the head of crushing in Ruchi. We like to know what is happening in India regarding the red crop and soya crop, and at the same time palm plantation business. We would like to know from him.
Thank you, Sandeep bhai. Thank you, Tatlas, and good evening to all the esteemed guests. So, as I said, I'll restrict myself to the Indian oil seeds, which is soybean and rapeseed. Last 2 years have been very interesting years for the Indian crushing industry. And although there are many fundamental which work would drive the prices, but there is a new factor which has came in India and some other parts of the world, which is farmer. So, and he played a crucial role in deciding the prices for the last 2 years for both the commodities. If we have to speak on the quick numbers, so this year we see soybean crop, although there are different numbers coming from soya crop, varying from 10 million to 12 million ton, but we take it close to 10 million tons. That's the number we take for the soybean for this season. And if we talk about crushing, this year there has been very less exports of meat from India, and the crushing margin or replacement basis were on most of the days negative. So the crushing in India has happened till April close to 50 lakh tons, which is close to 5 million tons. And this same period last year it was close to 6.4 million tons. And this year there is a bigger crop of almost 15% when compared to last year. So if we go by all these numbers and put together, so Indian out of 10 million ton, if we still go by 12 million ton number, then those numbers would go further higher. So I put my maths on 10 million ton, 5 million ton crushed. We are assuming that 1.2 to 1.3 million or maybe 5.2 million ton crushed, and 1.2 to 1.3 will go as a carry forward sowing and all that stuff. So which leaves the balance seed for Indian soya seed close to 3.5 million tons. And we have 5 months remaining before the new soybean crop comes in October. And this 3.5 million ton soya seed gives us meal close to 2.8 million tons. And Indian demand of soya meal and for edible purpose is close to 500,000 tons. So that all put together 5 months, the total requirement for India for meal and domestic food would be close to 2.5 million ton of meal. And if we are putting all these maths, so the meal which is available with us is close to 2.8 million tons. And apart from that, the government allowed another meal imports which further add to this number. So going by all this, we don't see any upward movement in the prices of soya seed from here. But as I said, apart from fundamental, there is another technical thing coming, which is farmer. We have seen the entire season, the prices of soya seed fluctuated from 70,000 to 80,000. As soon as it came down to 70, 72 levels, farmers stopped bringing. When it came to 78, 80,000, farmers started bringing. But now with this scenario changing, we don't see farmer will have much other option rather to bring the seed irrespective of the price level. So that is what on the soybean seed. If we talk about mustard seed, and just to add on the soya seed, last year, why the prices in the last 3 months, the prices of soybean went to 1 lakh rupees a ton. The reason for that was because in the initial O&D, the crushing was very high because there were a lot of export which happened of meal which happened from India. And during the crop was smaller when compared to this year. So the seed got finished. There were very less seed available even to cater to the Indian domestic demand. But this year the scenario is totally different when compared to last year. Bigger crop, lesser crush, and even we see a lesser demand from the poultry. So although fundamental says there is no bullishness in soya seed, but as I said, the other technical factor, farmer, let's see how he reacts and brings his seed, but ultimately it's fundamental what would rise the market. So if we come on the mustard seed, so mustard seed again, this is a problem, or I would say, in India there were different numbers come from the different crop. So again, although it's not as, variation is not as high as soya, so difference
People are from 9.5 million to 9.5 to 11 million tons. But what has happened this year in India on the mustard crushing, so in India mustard crops starts coming in the month of mid-February and comes in full flow in March. So far again means we see this mustard crop number as 10 million ton again, plus 10 to 10.2 million ton. And because of all this turbulence that happened in the last 2-3 months, there has been a record high crushing of mustards in India. If we talk from this new crop season for mustard starting from 15 February till I would say till April end, the crushing numbers are close to somewhere between 30 to 32 lakh tons, which is 3 to 3.2 million tons, which almost is almost 32% of the total crop size. So this has been a savior for India because mustard has 40% oil, and with this record crushing and this sunflower shortage and crisis in the market, mustard helped a lot in making up for the shortage. And there is a lot of mustard which has also gone into refining mustard oil, so which has also compensated to an extent for the soya oil and sunflower oil. So if we have to see, now we have another almost 10 months left before the new mustard crop, and the crop what we balance see is 68, close to 68 lakhs, 6.8 million tons. Out of the 6.8 million ton, almost 0.8 million is with the stockist and the plants, and the balance 6 million ton remains with the farmers. And exactly this month, if we see this season, what we see, everybody was fearing like, will the mustard farmer will also hold the crop like the soya farmer did, and this is what exactly happened. The highest last 2 months, the highest mustard arrival reached to a level of 12 to 13 lakh bags. We in India we do it in bags. So now the arrivals have dropped down to close to 4 to 5 lakh bags, which is almost 40% or 35% what used to be in the peak season. In fact, the scenario is such, whatever the plants are crushing, they are not able to get the replacement seed what they are crushing on a daily basis. So if I had to say between mustard and soya, bearish in soya and mustard, bearish in soya and bullish in mustard, shifting soya positions to mustard will be a better bet. And if we talk about mustard oil, mustard oil has been selling almost 5 to 10 rupees cheaper from the soya oil in the last, I would say for the last 1 month or so. Till recently the difference has come down to almost 5 rupees. It's still cheaper, but mustard oil is a premium oil than soya, and soon it will attain its premium over soya. I cannot say it is 10 days or 30 days or 3 months, but for sure this is what exactly happened in the last mustard crushing season. So that's, out of all the oils, I believe mustard oil is the best bet to having. So this is on the mustard side. And if I'll take another last 2 minutes on the Atmanirbharta mission, because that's the industry. Indian government has been focusing a lot, and that's, I would say, the savior for India. Someday Malaysia bans oil, someday this Ukraine fight, someday some policy changes with other government, and it's high time now that Indian government should we have been representing government and saying this. They have taken a very good initiative in the oil palm plantation by Oil Palm Plantation Mission, and they are taking very seriously on the oil seed mission, as the other people who are also speaking, like it's high time it should be rolled out on ground. And if we have to talk about the Indian crushing capacities, the Indian average crushing capacity utilization is close to 40 to 50% maximum. In case this oil seed production goes up, from the first day itself, the oil plants can crush and refine more. So that's what is my say on
Thank
this.
you, Amanji, for nicely explaining the soybean rapeseed seed situation in India and the crushing situation in India, also regarding the palm plantation. And the Indian government is now really very seriously looking at Atmanirbharta, increasing local production. And they have already put 11,000 crores for palm plantation in Northeast. So all these things are happening. They're realizing that you have to be somewhat our self-sufficiency is only right now 40%, but we need to increase it to about at least 60%. That's what government want to achieve in next 3 years. Friends, now after this, I want to go to Mr. Thakur because we didn't ask him before. Earlier panel he expressed his view on the macro. Just I want to know from Mr. Thakur what he thinks about the prices on the palm side. This index, where he thinks in next 1 month or 3 months or maybe 2022, what he thinks about it.
In fact, on the palm side, the production definitely has been an issue last couple of, I think probably 2 years. All started with the labor issues in Malaysia, and which further got also impacted in Indonesia as well. So from what I see in palm prices, the palm prices probably are inflated or were inflated first because of the issue in Ukraine. So the war premium, if we may call it, of a couple of $100, which was a knee-jerk reaction from the war in Ukraine, and further coupled by the knee-jerk reaction in Indonesia as well. We saw prices up by almost $200 to $50 and then corrected back. So, I mean, these are knee-jerk reactions which are happening in palm. But going forward, I think on the macros which are impacting the prices today. Interest rates definitely is a dampener for commodity prices, higher interest rates, equities drop, everything is throwing the spanner on the palm, the spiral. And I get a feeling that the production in palm will not be growing as expected. We may say that biological cycle-wise palm production should get better this year, but labor issues in Malaysia I think are not going to go away. Production probably will not be what most analysts are anticipating in Malaysia. Indonesia definitely, because of acreages improvement, production is going up, but we have to be aware of the situation that moratorium has set in, new plantations are not coming. A lot of plantations have already, reached the ripening stage, and the production, further production growth in Indonesia may not happen. I mean, if we take a base case of 42 million tons or 43 million tons, probably 1.5 million tons extra and 500,000 tons in Malaysia. That is all that can be expected on palm. So, with demand destruction, probably prices may soften a bit. The macros are pointing to that, but I feel down the line in a couple of months, we will not see a low price regime anytime soon. My guess would be probably if we get to 5,000, 5,500 level in palm, BMD would be lucky. Thanks.
Thank you, Mr. Thakur. So nice. Friends, now I'm not going to ask the panelists too much pinpointed questions on the price because we are running short of time. Secondly, tomorrow, 3 people are going to stick their neck out on the prices. That is one Mr. Sudhakar Desai, one Mr. Nagaraj Meda, and Dorab Mistry. So let these 3 people take the biggest risk of it tomorrow. And I must thank my esteemed panel for fantastic views and expressions on supply, demand, weather, government policy and everything. It was a very cross discussion world over. And oil seeds, oil, palm, soya, everything we covered. So let's give a big hand to this panel. Thank you, thank you.
Absolutely. Ladies and gentlemen, our final session for the day, and I think that round of applause should be louder now. A very impactful session for all of us to have takeaways from. Thank you so very much, all of you gentlemen. And at this point of time, I'd now like to take the pleasure of inviting the Vice President at Tirumala, Mr. Rahul Khole, to kindly join us up on stage. Let's have a round of applause. And I request Mr. Rahul Khole to kindly now hand over the e-mementos to all our eminent speakers here. So Mr. Rahul Khole is going to have a handshake with all of our eminent speakers or panelists here, starting with Mr. Sandeep Bajoria. Let's have a nice good firm handshake. Thank you so very much. Mr. Sudhakar Desai, Mr. Mahendra Ved, Mr. Naveen Sharma, the photographer, I hope you're getting the backdrop as well. Okay, alright, we just probably need to space out a little. Gentlemen, if you don't mind, so we can have a clear view of the backdrop. Thank you so very much. Inviting Mr. P.R. Thakur, Mr. Tajgir Rahman. Thank you so much. Mr. Vivian Gupta is not here. Mr. Hemant Bansal. Mr. Kalapuram Santana Sridhar. Thank you so very much, sir. Mr. Ashish Acharya. Thank you so very much, sir. Mr. Prashant Reddy is not here. And with that, I request Mr. Rahul Khole to kindly step right in between all the gentlemen there. Let's get a group photograph together.